Hello and welcome back to Core Finance. I'm Matt Brown, joined by Ronnie Chopra, Chief Market Strategist at FIXI Markets, and we're going to look at the Nifty. It's an index that we don't really talk about enough, I think, and it'd be important for our viewers. It is an index worth looking at, I think.
Yeah, it's got high volatility, and so for traders out there, it's a good one to be in.
And obviously, over the year, I mean, as all indices, global indices, maybe, well, most of them, not the FTSE as such, but the Nifty has moved to the upside. It's gone from strength to strength. Can that continue? And is this a play on investing in India?
Well, it's had its falls as well, as we can see. In August, it fell probably about 6-7%. We've just experienced a 4-5% fall as well. A quick answer to your question, can it continue? No. I think it's extremely overvalued. There are some very, very serious domestic issues in India at the moment. We have elections in Gujarat on the 9th of December, so the next couple of days. And the BJP, their lead has narrowed considerably in the opinion polls over the last couple of months. It's pretty much neck and neck apparently now, which 3 months ago was a complete impossibility. So that could be a catalyst to drive the market down further. Having said that, the Indian economy is very domestically oriented, and with demonetisation, because of the cash transactions being far less than what it was more than a year ago, a lot of people in India have put money into the stock market. But what is surprising is that overseas investors have not, because on fundamentals, on valuations, the Indian market is extremely overbought, and overseas investors have not participated in this rally. But as I was saying, the domestic demand in India is huge. But you need to be making decent profits to justify the current market value of a lot of companies. And with fundamentals extremely overstretched, especially when you compare to other overseas indices, such as the FTSE 100 or the Nikkei, or even, hate to say it, the Dow, where valuations are stretched too. But the Indian market, with its high price-earnings ratio, regulatory issues that fall far below the standards in the West, and the domestic concerns politically, the market is extremely high. The other major concern is, and I've mentioned this before in the past, is the religious differences between the Hindus and the Muslims. What we're seeing is, in India, that the Muslims are being ostracized in quite a nasty way, and that's not in the interests of India to have these religious differences. I mean, for example, in a state in UP, which is the largest state in India with a population, I think, of approximately 200 million people, so it's 3 UKs,
Incredible.
Is huge, and the Muslim population there, I think, is maybe 30 to 40%. And that's a huge number. Also, in UP, you have the chief minister called Yogi Adityanath, who is very anti-Muslim. And that doesn't bode well for the future economic success of India if you're going to have these religious differences in a country like India.
And with regards to it being domestically held by nationals, if suddenly this turns and you see kind of another 5, 6, maybe even 10% drop, do you think there'll be a flood of selling orders coming in, which could even push it more aggressively to the downside?
Definitely. I think it's a very nervous market at the moment, and the elections in Gujarat over the next few days could act as that catalyst for a sharp move down.
Seller for choice then?
I think so.
Good stuff. Ronnie Chopra, thanks for joining us.
Thank you.